All right, so we're going to continue with single entity published accounts. Okay, whereby our emphasis is going to be on single entity financial statements. Okay, it's best to get the grounding on single entity before you transcend into the area of consolidation. Okay, so for single entity, our emphasis is going to be on how the financial statements are prepared for reporting entities. You already know what a reporting entity is. It's any entity that is required or chooses to prepare financial statements. Okay. So for single entity, we need to be abreast with various financial statements. Okay. IFRS 18 has come to replace IAS 1, but it's still in its adoption stage. A whole lot of entities have not really transitioned to the use of IFRS 18. People are undergoing training for the adoption, etc. Okay. So this is basically catered for in question 3 of our FR examination. And it is comprehensive. Like it is a lot of workings, a lot. Okay. So if you want to describe stress, this is called stress. All right. So this is not meant to boo them. It's just meant to give you guys a heads up. Okay. So I dropped 2 questions. I really wish I could solve every question, especially this one. So, all right, so we're going to try our hands on a question. And for my students, we've done this question. So if they say they want to leave the call, that one is understandable. Unless those that fail to join and then they want to revisit it, then cool. They can stay in. Okay, I'm directed to do question 2, and they might share the question 1 with you. Okay, then that's fine. So we'll do question 2 instead. But before we do that, let me explain what we are going to do under single entity. So when we are talking about single entity, we are dealing with the various financial statements of a reporting entity. Okay. In regards to the various financial statements, they are comprehensive, but these are the required the statements of comprehensive income, which is also known as statements of profit or loss, and other comprehensive income. And then we have statements of financial position. We have the statements of changes in equity. We have statement of cash flow, and then we have notes to the financial statement. Because of the existence of notes to the financial statement, single entity published account preparation requires that every form of working would be sent to your notes to the financial statement, and the final amount will be transferred to your individual financial statement. So by default, they're not expecting you to have any workings on the face of your financial statement as compared to consolidation, which is really allowed. But as I've said before, when you are constrained by time, then you can ignore the fact that you're supposed to make workings and then transfer it and then do it. You might lose the ticks for the ones you've presented on the face because it is the standard. Okay, the standard itself says we are not supposed to present it on the face of the financial statement. That's why they've included this notes to the financial statement. Okay, it's also known as our workings. All right. So the various financial statements in a single entity, they have a format in which they take. Okay, they have the various formats, and I believe most of you have already come across it. Because if at this point you've not come across it, you and the people are writing yourselves. Don't mind me, I'm just kidding. All right, so there are various formats that we are to note down, but you should know what is basically expected of you under each financial statement. Okay, so for instance, a statement of comprehensive income, you should know how to go about with a heading. You should know how to go about with its heading. So the heading like this, at this level, we they do not mark headings unless maybe you and your paper you didn't write anything, and they say, let me just close my eyes and give a tick here. So statements of comprehensive income for the year ended so and so. That's how it's supposed to be. Those who are fond of written assets, I don't know whether you've been in asset relationships, but it is for the year ended because we are looking at an accounting period. Okay. The accounting period, which is basically 1 year. And I always like to see this that statement of comprehensive income, it is not cumulative. Statement of financial position is cumulative. Okay. So you're just focusing on one accounting period, and you'd have issues of your revenue, you have your cost of sales, you have your gross profit, you have your expenses. So basically your distribution costs, your admin expense, and you get your operating profits because these are operating costs. Okay. So you get your operating profits. Although IFRS 18, IFRS 18 still opts for us to present operating profits, but they want to be separating the things inside to operating, financing, and investing. Interesting. Okay, operating profits, and then we have our finance costs, and then our finance income. You can call it investment income anyway. So cost, expense, income, and then we have our profits before tax, right? They have your income tax. This is like a basic format. That doesn't mean that these are the only things that can come there. Others can come, but they might be grouped under various different headings. And then you have your profits for the year. So I'm just going to draft that of this. And we have other comprehensive income. So under other comprehensive income, I said yesterday, oh sorry, other comprehensive income, what mostly comes there at our level relates to our revaluation gain. Okay. When there's a gain or revaluation for financial reporting level, unless you're doing corporate reporting, it goes beyond that. So for financial reporting level, a revaluation gain pops up and you have your total comprehensive income. Okay. I'm not going to walk you through statements of financial position. That one is easy peasy for everyone to know. What I'm going to do is just an idea of how a statement of changes in equity look like. But that doesn't mean it's something that will come. They don't even like certain questions for statements of changes in equity. It's like they feel like it's something that you can easily adjust as part of workings. But just finding the balance brought down, bringing any additions, you are good to go. So that one, it is columnar, right? We have our stated capital. This deals with equity related items. Okay. Equity related items. So we have our stated capital. These are the basic things that you see there. Your stated capital, your retained earnings, your revaluation reserves. You might have a total. Okay. So these three things are the basic things that pops up. And you'd have your balance brought down. Stated capital amount is always fixed unless later on they make new issues, okay, new share issues. If not, that amount is fixed. You don't really need to make any adjustments to that. Okay. So for the retained earnings, profits for the year goes there, not total comprehensive income. Do not be tempted. So profits of the year goes there. And then revaluation gain goes to revaluation reserve. So you see that some of this and this gives you a total comprehensive income. Right. And then if you have any dividend payments, entities pay their dividends from their retained earnings. Okay. Sorry, dividend paid. Dividend payments are made from retained earnings. And in case there are issues of transfer from the question states, you have additional information that states you should make some transfer from retained earnings to reserves, etc. Then you would also what you call it? You're going to factor that, okay? So you're going to factor that one too. But let's leave it at the basic requirements, and you are good to go. All right. So one thing you should note is what elements are prevalent in the various financial statements. Your statement of comprehensive income requires you to show them your revenue, your expenses, your loss, and your gain. Okay. So revenue, expenses, They are all expense, as we saw in the element. Revenue and gain are both income. Okay. So for the statement of financial position, it requires to see your assets, your liability, and your equity. Right. And the statement of changes equity is basically equity. Statement of cash flow, cash movements, okay. And it takes pieces from each and every one. Okay, it takes from this, takes from that, etc. And note the financial statements are all your workings. All your workings goes to the note to the financial statement. All right. So this is what's required of you, and you need to work with speed. Speed. The level of speed where someone is chasing you, where you're running for your life. That kind of speed is what you need to work with regards to this question. Yes. Yes, please. The working board will be shared. So you move with that level of speed in answering questions pertaining to single entity. Okay, so we are going to, you're welcome. We're going to tackle the question 2. I've tackled question 1 with my students. So admin says you make the video available, and I've told him that he wants to make the video available. The intervention is free. The video is not free. Me, I'm a lady, so I like money. So if he won't take money, me, I'll take money. He says he will take me to Alpha Hour, so I have retracted my statement. Anyway, the video will be made available to you so that you guys can have the solutions to this. Okay, so you're going to do question 2, which will benefit my students too. They're going to do question 2. It's a lot. We are going to sleep here. You might even miss your PSA class, but we'll do it all. Okay. So the following trial balance relates to Pinton PLC as at 30th June 2023. So we have revenue, this, it's comprehensive. And then we have the note number, okay, to guide you. And we have our additional info, and we have our requirements. So that's what we need to know, what we are to do before we kickstart everything. Okay. So what do we need to do? They're saying that we should prepare for Pinton PLC the statement of profit or loss and other comprehensive income for the year ended 30th June 2023, and the statement of financial position as at 30th June 2023. So these are what we are required to prepare. Okay. So we have 7 additional informations, and they are all loaded. So there are various ways we can tackle this question. It's either for your workings, you go line by line, or you go additional information by additional information. But me, I'll advise you go line by line. But when the line item that you are treating requires an additional information to be solved, then you solve, you make workings for that, and then you continue line by line to make things easier for us. Okay. All right. So to those who didn't get time to learn other standards, we will dive into various standards because this one is comprehensive. It has standards from different sides. So we'll dive into other standards. You get to have an understanding of certain treatments. I hope by the end of the session, you and your pen will be tired enough, and then you know you have learned something. Okay. Okay, so sorry, the snipping took a long time. All right, so yeah, we have a question here, and we're going to go through. So there are seven, yeah, there are seven additional information, and we're going to try and go through every single one of them as we solve the question. So we have. Do I still need to mute some people?
Pacha ase deɛ.
All right. So let's do it. So we have Pinsim PLC, and we are going to write and pass out. Okay. So in the books of Pinsim PLC, we are required to make notes to the financial statement, and that's going to be our first thing. Okay. But in the examination hall, if you are certain of your spaces, you can prepare your statement of profit or loss, the heading, and leave a huge space. Take another page, statement of financial position, and leave a huge space. Before you come to the workings, so as you're doing the workings, you'll be posting stuff like that. Anything that works for you. But I feel like for you to wait for this is done, it will be quite, what you call it, time wasting. But how I'm doing it is for teaching purposes. So my way is different. Okay, so note to the financial statement. You can just write workings if you feel like it's too long for you. Anything go, you guys are under pressure, so don't understand. So I want to make things easier. So just to give them caveats. Okay, so you don't have to be rewriting everything. So I'm going to go line by line. Okay, so I'm going to clearly kickstart with revenue. Then as we go further, maybe something would pop up and I'll need to open a different account aside revenue. So revenue, we have revenue in our trial balance, and then we have note I relating to revenue. So we find out what it says we should do. It says that revenue includes 50 million sale made on 1st January 2023 of maturing goods which are not biological assets. Okay. The cost of the goods at the date of sale was 10 million Ghana cedis. Pintim is still in possession of the goods, but they have not been included in the inventory count. They have not been included in the inventory count. Pinteam has the option to repurchase the goods at any time within 3 years of the sale at a price of 50 million Ghana cedis plus interest. At a price of 50 million Ghana cedis plus interest of 10% per annum. On 30th June 2023, the option had not been exercised, but it is likely that it will be exercised before the date it lapses. Okay. So first of all, we've been told that revenue includes 50 million sale. Okay. So 50 million sale, I would say that when they are telling you includes have not been included, it's just to give you a hint. Okay. So when they say it includes this, meaning something must be done about it. That's just a hint. That's not for me telling to apply accounting treatment. This is me telling you to use basic knowledge. Okay. With all respect to you for us to use basic knowledge. So it has been included, has not been included. So they're just trying to tell you that it has been included, take it out, it hasn't been included, put it in. That's how I'm just trying to guide you in case you get lost and you don't have the time to like be straining your brain. It's just telling you you're supposed to do the inverse. But after you feel like you're supposed to do the inverse, apply what is said by the standard. Okay. So revenue includes a sale of 15 million and it was made on maturing goods. Okay. Maturing goods, which are not biological assets. We have no problem with the fact they are not biological assets. And now we are being told that there is an option to repurchase at any time within 3 years of the sale at a price of 50 million plus interest of 10% plus interest of 10% per annum. This is giving a feature of a liability. We've recognized the sale of maturing goods, but in how do I call it? This term is it legal over substance? Substance over something. The legality and the substance over form. Yes. Yes. So, although it is a sale that has been made, in substance, it is a loan. Okay. The nature of this claimed sale of maturing goods is a loan. And the entity would likely exercise this loan before the date lapses. So, hence, we are supposed to recognize this sale as a loan. Okay, so this is just sketches. So in recognizing this sale as a loan, then clearly we are going to debit revenue, credit loan account. Okay, with a 15 million. I'm doing this. I like this treatment before I do the whole thing. So you should understand it from this point. So you debit revenue, you credit loan account of 15 million. Okay. And after doing that, we are being told that the cost of the goods at the date of sale was 10 million, meaning we have included this as part of our cost of goods in our statement of P&L. So meaning our cost of sales, we have 10 million of this sale sitting in it. And it says that Pinteam is still in possession of the goods, but they have not been included in the inventory count. So we need to include this goods in our inventory. This good that is idly sitting in our cost of sales, we have to include it as part of our inventory. So hence we are, I want to make the transaction sales. Okay. So yes, for this, we are to debit inventory to include our 10 million, credit what is it? Yeah, cost of goods. So clearly maybe cost of sales. Depends on how the thing is. To include our 10 million. I hope you understand to this point. To include this 10 million. Okay. Why some people again we saying respect yourself. Yeah, Robin, I said no, please. Is it that what I said? Oh, I'm reading an old message. I can't see. Respect yourself. Oh, okay. You are insulting each other. Hey, you are mature though. We beg you. Okay. So these are the transactions. So you debit inventory to include the sale as part of your good count and exclude it from your cost of sales. In the sense that now we haven't um bought it as part of our normal business running, okay? But now it is a loan we have taken to purchase the inventory. Okay, so now we are recognizing a loan and de-recognizing the fact that we have made a sale on the maturing good. And now we are de-recognizing the fact that we bought the goods, or rather we took the goods on loan and at a cost of 10 million, which is included as part of our inventory. So that's why we are reversing and reposting the transactions. Okay. So since this is being done, then clearly the 10% interest here, we'll need to consider it, right? So it's going to be a finance cost. I'm telling you where everything is going. So when you get there, you don't want to come and struggle. So this is going to be a finance cost on the 15 million. And when was it? When does the period end? 30th June. So we have to apportion it. The dating is important. You have to apportion it in accordance to the month. Okay. So we made the sale on 1st January to 30th June. So 6 months over 12 times 10% times 15 million. Okay. So you are going to recognize finance costs. You are going to debit. We are going to credit current liability. Okay, this is just scribbling here. All right. So I came here only because of revenue, but I see where revenue has taken us to. We had an additional information that caused us to dive into various places. Okay. But since we've made the skirmishes here, we can easily make reference to them. So, but our emphasis is going to be on revenue. So we have to debit revenue with 15 million. So first we bring our per trial balance. So me, I'm writing TB. So per trial balance, we have 966,500, and we have sale of is it maturing goods, and that is 15,000. Okay, so now we know it is affected by revenue is affected by additional information I. So clearly we might not find any effect in any other additional information. So let's jump from revenue to the next one. So the next line item is cost of sales. Cost of sales involves a whole lot. We have items, expenses that by default are supposed to go to cost of sales unless the question states otherwise. The first one is depreciation. We end the day, depreciation will go unless the question states otherwise. Okay, so depreciation goes to cost of sales, impairment goes to cost of sales unless the question states otherwise. So we should keep all of that in mind. Okay, so cost of sales per trial balance is 442,500. So I said depreciation goes there. But we remember we're doing something here whereby cost of goods at the date of sale was 10 million and we need to derecognize it from cost of sales because we don't have cost of goods as a line item here. So maturing goods 10,000. All right. And then we'll come and deal with depreciation. So now that's the issue. Come and deal with depreciation. So now coming to deal with depreciation, we need to go and see if we need to do something in relation to depreciation or the assets in question. So clearly, the next line item to be on the safer side, we prepare a PPE schedule. Let's deal with depreciation and its relatives. Okay, so for PPE, we have in our trial balance, we have property at the beginning, we have plants and equipment at cost, accumulated depreciation, etc. And then we have additional information relating to that. So let's go to additional information III. It says that first, like say it looks like a repo agreement. The entity sold the goods with an agreement to buy back and recognize it as revenue. Oh no, it doesn't. It doesn't give a feature of a repo. Okay. Pinsim's property is carried at fair value, which at 30th June 2023 was 145 million. The remaining life of the property at the beginning of the year, that's 1st July 2022, was 15 years. Pinsim does not make an annual transfer to retained earnings in respect of excess depreciation or revaluation. The company pays tax on profit at the rate of 25%. It's getting interesting. All right. So Pintim's property is carried at fair value at the end of the period. So meaning they want us to make our carrying amount look like 145 million. That is way tougher than telling us that it got revalued at the beginning of the year. That would have just been easier. But now we have to make it look like we had this at the end of the year. And then we'll find our revaluation gain. So let's dive into our PPE schedule. So for our PPE, we have so this is what was property, yeah. So we have property and then we have plant and equipment. And we have our total. Thank you. So for our property, we have our carrying amount or at the amount at the beginning. So property valuation. So balance brought down. That's July 20. July 2020. Two 142,500, and then we have plants at cost. Okay, this is going to be an issue. Plants at cost. Plants and equipment is depreciated at 15% per annum using the reducing balance method. No depreciation has been charged on any non-current assets for the year ending. Okay, so we are going to backdate our presentation. Give me a minute to write this. We are going to backdate our presentation to factor it. I don't think there will be a need for that. Okay, there's not going to be a need for that. We are supposed to bring the carrying amount of the plant and equipment. That is after we deduct depreciation from the plant and equipment. That's why I'm a bit caught up. Okay. Okay, so presentation matters. So let me do it. So the cost of the property the property hadn't been depreciated yet because it doesn't have any accumulated depreciation. So I can do it this way. So 142,500 for property. Plant and equipment is 135,500. Okay. And that would be um that would be what? 2022. So and then we have additions that deals with our gains, and then we have disposals. Okay. And then we have our final amount. So we've not determined our additions yet. We've not determined our disposals yet because the figure they gave us for the revaluation gain, the fair value, was at the end of the year 2023. So we need to compute our depreciation based on the existing costs that we already have in our books. Okay. So our accumulated depreciation balance brought down, we have 45,500. We have dash. So our charge for the year, is going to be so that is going to be 142,500 divided by how many years useful life? 15 years. So please, how much are we getting? 142,500, 15 years divided by 15 years. Yes.
9,500.
9,500.
Okay, 9,500 and 135,000, 135,500 minus 45,500 times 15% because they are using the reducing balance method. Okay. So 135,500 minus 45,500. What are we getting?
13,500.
No, I don't want the final figure. I want it to be in a way that you can easily make reference to it when you're going over your notes. So
Okay,
because it's reducing balance method, so it's going to be
90,000.
90,000 times 15%. And that's going to give you the 13,500, right?
Yes.
Yeah, I'm sure that's what I heard. So it's going to give you 13,500. All right. So with this being done, the summation of this and this 9,500 and 13,500 gives us our total depreciation. Let me just write it here properly. Right. And then we come back to get our carrying amount. So our carrying amount, so balance carried down. We write it like this. So for property, they said it was fair valued to 145 million. It was fair value to 145 million. So now we need to make sure it looks like this. 145 million. So if that's the case, then what we are going to do is that we are going to deduct the depreciation from the cost, and we are going to get a balance brought down. We are going to get a figure, and the figure we are going to deduct it from this and get the revaluation gain. You make it much more presentable. If not, people can tell me they are confused. Okay. So the carrying amount brought down. There's no brought down, but I'm using this 142,500 minus 9,500. How much are we getting?
133,000.
133,000. This is not what you're supposed to do, but I want you guys to know. And then this is the balance carried down you're supposed to have. 145,000. What's the difference between this and this? What's the difference between this and this?
12,000.
12,000. So 12,000 becomes your addition. Do you get it? So now 142,500 plus 12,000. So now here would be 154,500. And now when you deduct your 9,500, you're supposed to get your 145,000 in order to reflect the fair valuation. Okay. All right. So this one is just the basic way you do it. So this will give you 0.009,5. So 59,000. This is 125,500 minus 59,000. How much are we getting?
76,500.
76,500. Okay. So you can do that for the total, so we get our total. Because you are presenting PPE as a line item. Okay. Thank you. Can verify the figures for me. Anyway, we've gotten the main reason why we came to open the PP schedule was actually to get the depreciation charge for our cost of sales. So we've gotten it. That's 23,000. Okay, 23,000. Okay, so now after getting our depreciation charge for our cost of sales, let's go through the additional information and see if there is something else we would need. Like teaching yourself in the comment. All right. So let's go to the remaining additional information and see if you see something else we can deal with. Because cost of sales is more technical. They'll deceive you and not give you any notes to attach to it. So you think that's all you need, and then you go and see something buying. All right, so we are done. We are done with part of this, but we should remember the 25% is going to represent deferred tax, okay, on the revaluation gain. Or revaluation gains, you are going to make deductions to it, okay? And then we have 5% loan notes issued at its nominal value, incurring direct cost issue of 2.5, which have been charged to administrative expenses. Has been charged to administrative expenses. The loan will not be redeemed after 3 years. Blah, blah, blah. Which have been charged to administrative expenses. So they're trying to tell you that something is wrong about the treatment. So that one relates to admin expenses. So it's not our wahala for now. Disposal had a fair value provision for current tax, paid dividend. Okay. Pintim commenced a research and development project on 1st January. It spent 5 million per month on the project. Okay, so yeah, we have expensed research and development costs should be charged to cost of sales. So now we have to treat something that is going to affect cost of sales. Okay, if that's the case, then let's do that. So we are going to talk about something in relation to IFRS 5. I believe we are all abreast with IFRS 5. Non-current assets held for sale and discontinued operations. Hey, sorry, research and development. IAS 38, my head. IAS 38, research and development. Okay. Whereby when an entity undertakes in research, we need to, what do you call it? It's supposed to be expense. Research are expensed, and we capitalize development project when it meets certain criteria. Okay, when it meets certain criteria, the criteria, I remember there's an acronym for it, pirates or something. So you guys can go through your notes. So for research and development project making, the standard says that research on a project is required to be expensed, and development for a project can be expensed until certain criteria are met, and then it would be capitalized as part of the development expenditure. Okay, it will be capitalized as part of the project expenditure. So we are going to break them down. So we have for Pintim on 1st January, he commenced the research and spent 5 million per month on the research until 31st March 2023. So we have a research expense of 3 months of 5 million, giving us 15 million expense. The project then passed on into its development stage with an 8 million per month spending from 1st April 2023 to 30th June 2023, when the development of the project was completed. However, on 1st May 2023, the directors of Pintim were confident that the new product could be a success. So, due to their confidence on this date. It's a reason for capitalization of the expenditure on the development. But it passed to the development stage from April to June, April, May, June. So that's 3 months. But they were confident of its success on 1st May. So meaning we are to capitalize only from May to June. That is 2 months. I'm trying to break it down for you. That is 2 months. So meaning 1 month, that is April, for development cost would be expensed. So that is 8 million development costs. Yeah, that's how I can break it down enough. So for that reason, we are to charge it to cost of sales, research and development. So how we do it is to 5 million times 3 plus 8 million. We don't really need to do times 1 plus 8 million is going to be expense to cost of sales, to be charged cost of sales. How much are we getting? So 15 times 8, that's 23. Right, we get 23 million. So we include 23 million. All right. So that was the only additional information left relating to cost of sales. Any question? I thought the accumulated depreciation will go to statements of financial position. The current depreciation goes to both statements of financial position. Yes, it will. Why did I read something wrong? It will. So it has already been catered for. That's Andrews. It will and has been catered for. So that shouldn't be much of an issue. So let's move on further with what we are required to do. So regards to the next item is going to be research and development cost, and we've done it. So we've done this, we've done this, we've done this. Distribution cost, we are just going to state it as it is. So please remember. Administrative expenses has as a note on it. So let's do administrative expenses. So workings for admin expenses. So per trial balance, admin expenses is 34,000. And then we're told that 5% loan note was issued on 1st July 2022 at its nominal value of 100 million, incurring direct issue cost of 2.5 million, which have been charged to administrative expenses. So issue cost charged to admin expenses. I don't know. Issue cost for this loan, with a nominal value which will be redeemed after 3 years at a premium of 8%. Clearly not. So direct issued cost should rather be charged to the liability amount, the loan amount, and not the issue cost, and not administrative expenses. It's not supposed to be expense. is supposed to reduce your nominal value of your assets, of your liability, and assets. Direct issue cost. Still is training me. So that's 2.5 billion. So 2,500. And we are done with admin expense. So since we're already dealing with direct issue cost, the next thing is loan notes interest and dividends paid. Loan note interest and dividends paid. And then we have as IV and II. Loan note interest and dividends paid. And then we have investment income. Sorry, I was muted. So you're going to do the finance cost to take cater for the various interest. Okay. So next line item, finance cost to cater for the various interest. So regards the finance cost, we have the issue of the value in substance, that's the loan, and we did it here. And we said we have to debit finance cost with so loan loan in substance 6/12 times 10% times 15 million. Please let me know how much we are getting. And we already have an existing 5% loan. 5% loan of 100,000, which we're told had issues of direct issue cost. Okay. So we need to find that loans, what you call it, um, amount of interest. So that's 100,000 minus 2,500 times what's the rate of interest? The loan note will be redeemed after 3 years at a premium, which gives the loan note an effective finance cost of 8% per annum. Annual interest was paid on 30th June 2023. Okay, so it had its interest paid. So since it was paid, we are recognizing it. Right. So please, loan in substance, how much are we getting?
750,000.
You get what? Loan in substance.
750,000.
So 715. And then 5% loan, 100,000 minus 2,500 times 8%.
6,000.
Okay. So please, you all should kindly confirm the figures for me. All right. So that's all for finance cost. And what did I bring on? Everywhere go bless you. Equity. And deal with that one later. Efficiency. Okay. Equity notes. So property at valuation has been dealt with. 5% loan notes has been dealt with. What else? Financial assets. Okay. Financial assets at something something. So we have investment income. Financial assets, equity investment had a fair value of 48 million Ghana cedis. There were no acquisitions or disposals for these investments. Financial assets, equity investments, regards to the standard, they will be included as part of our investment income. So we have investment income per trial balance. That's 1,500, 1,500. And then we need to find the fair value gain on the investment. So we have 78, but the actual amount was what? Was 44 million. So gain on investment, -48 -44 give us 4 million. So 5,500. Okay, next. Provision for 6 million for current tax for the year ended 30th June 2023 is required. Additionally, 4 million increase in deferred tax provision is to be charged to profit or loss. Okay, so here they've clearly told us the deferred tax increase, but we're still going to prepare our deferred tax whatsoever. Right, so working 7, deferred tax. So as per trial balance, we have our deferred tax of 3,750, and we are told that there would be a 4 million increase in deferred tax provision. So, which was initially supposed to be our balancing figure. So, increase in deferred tax, that is 4 million. So now we should remember that we came across revaluation gain that we said requires a tax on it. That is here 25% on a revaluation gain. So that I said affects the revaluation gain in OCI. It affects it negatively. So deferred tax on revaluation gain. So the 25% on the revaluation gain of 12,000 we get 3,000. So now deferred tax carried down is going to be 0, 5, 7, 10. This goes it's going to be a non-current liability because the opening balance was already a liability figure and it has increased. And we've also charged revaluation gain deferred tax. So our deferred tax amount is 1050. So now we open our income tax expense. So this is what I actually said when we were doing IS 12 and individual accounting standards. So income tax, we are checking to see whether there is an existing income tax in our trial balance. So far, there is none. Okay, so if that's the case, then we use what has been given to us in our question. So we have a provision for 6 million. And then we have increase in deferred tax. And that is 10,750. So now our income tax expense 16,750. So now since we've done this, then let's do workings on our revaluation gain. Okay, so the gain on revaluation. Please, if you have questions, I can't see it at this point because I'm focused on this document, so I can't see the questions. Maybe we can just go ahead and ask. Gain on revaluation and then realize deferred tax. That is 25% times 12,000. We had 3,000. 12 minus 3, 9,000. This goes to OCI. OCI P or L. So this I just like to leave it designated so that you just go ahead and do the designations even when the session ends. Okay. So we've done this, we've done that, we've done these, we've done those stuffs. I want to see whether we are leaving something out. Okay, Painting paid a dividend of 0.2 per share on 30th March, which was followed by an issue of 50 million equity shares at a full market value of 1.7, 170 pesos. At 1st July 2022, Painting had issued $100 million shares at full market value of 1 CD each. Okay. That's fine. So that one is going to relate to dividend treatment. So it would affect our retained earnings when we are done. When we are done, then we'll make our treatment to our retained earnings. Okay. I guess there is not much left. Okay. So with that being done, then let's go ahead and make a preparation of our financial statements. Oh, I muted myself. I am writing. I've been writing. I'm asking a question. What is the figure? I don't know when. You guys can't even see my screen counter. Sorry. Um, cost of sales. This is where I got to. I know you guys are not online. Okay, so cost of sales, the finalized figure, those who summed it up. Four for two, 500 less 10,000, 20, 22 plus 28,000 plus 23,000. How much are we getting? So with the figures, you can unmute yourselves and speak.
Madam,
Can you unmute yourself?
500.
Yeah. Yeah, Eric.
478, 500.
478 500. Thank you. So we have that to be our working to. So our gross profit. Our gross profit is going to give us how much?
473,000.
Okay, and then we have expenses 31500. Workings for distribution, there's distribution cost. So distribution cost of 18,000. Get our operating profit. How much is our operating profit going to be? 23,500.
Madam, 423, 500.
Okay, 423. All right.
Yes.
Next is finance cost. So for finance cost, 750 plus 780, so 558, 8550. Okay. And then we have our investment income. So all that's left with is the posting. If you don't post it well, you'd be lagging behind. Investment income, okay, 500.
Please, the finance cost is 8,600.
750 plus 7,800. Okay, we have profits before tax. You give me the amount. We have income tax. $167.50. What's the profit before tax? Yeah, the person who said it's something, please verify. The lady said I had an issue with my figure.
And the profit is 420,450.
1, 2, 3, 4, 5, so okay. And we deduct
403,700.
income tax. It's increasing of a minute, okay. Increase in the fair tax as well. Increase in the fair tax is 4,000. Kindly correct it. So 4,000 plus 6,000. It's 10,000 instead. Which is 8. I teach for 5 hours. Never know. Which is 8, 10,000. Okay. So that is our income tax. So I believe this is going to be 410,450. That's just 10,000. All right. So then we treat so that this becomes our profit for the year. I feel like my aura is back. Profit for the year. And we then treat our OCI. I can't write the full thing. If you can, please do. Revaluation gain workings 9 is 9,000. Okay, so there is something here. I'm surprised no one has even asked me, or probably you guys haven't noticed. This thing. Loan note interest and dividends paid. So this is the trial balance at the end of the period. So they have catered for the loan note interest, right? And then this amount is what they are giving for dividends paid. But they have a combined figure here. So it's up to us to determine which aspect of it relates to dividends, which aspect relates to the loan note interest. Okay. So what I'm going to do is I'm seeing the relevance of the VII here. Okay. Whereby I have dividend of 0.2 per share on 30th March that was paid. Okay. And then after that, there was an issue of equity shares at their full market value, but that one is something we'll touch on later. So we are done with this. We are done with the statement of comprehensive income. So let me do this working on the side for the dividend. Let's see the dividend amount. So that's going to be like working 10 dividend. So dividend paid I told you what to do to dividend paid. You're going to deduct it from retained earnings. Okay. So dividend paid was how much? So dividend paid, they said it is 0.2 per share at 30th March, which was followed by an issue of 50 million equity shares. So the 50 million equity shares came after the dividend was paid, but the existing shares was 100 million. Okay, so 20 times 100 million is going to give you 20 million, right? So we are doing in thousands, so it's going to give you 20,000. So 20,000 of the 25,000 relates to dividend. So that means 5,000. So working slab, so 5. So the loan interest paid is going to be 25,000 minus 20,000. I feel like there should be some workings where you are allowed to do it on the surface, especially regards to the equity section, because this time around they're not opening statements of changes in equity. So what happens to the figures, right? I feel like since that's the case, then you can clearly um work for the equity section on the face of the books, but for the rest, no, thank you. All right. So I want us to do further workings and then we can wrap up. You'll be surprised we've come this far. All right. So let's make additional workings. Working 11. So capitalized expense on projects. This is going to be an asset. So remember we had the development cost. We said there's some 2 months times some amount of money for research and development that we are supposed, so some 2 months on 8 8 million. Thank you. So 2 months on 8 million. We're going to get 16. So we're doing it in thousands. So we're going to get 16. Just to just add everything up. Let's do inventory. So inventory. So per trial balance, we have inventory of 378625. 378625. Something I just said now. 625. And then we had for maturing goods, $10 million. There's going to make it 388625. Noted. Share capital. Share capital, we had the existing shares. How will I even do it, crap? The existing shares, because it's not here. Okay, so equity share, 196,500 VII. 196,500 VII. Okay. So equity shares, we have per travelers. $196,500. So that would be after considering all the adjustments, 196,500. So let me break it down. So breaking down, we have equity share, 100 million. Additional issue, that's at 1 cedi. Additional at 1 cedi, 50,000. Share premium, there must be a share premium. Share premium, 0.7 times 50,000, 50 million. 7, 5, so 50 million, 35,000. Okay. Trying to find. Okay, so it's left with something else. So if you are lost here, welcome to the game. Continue to pay the dividend of 0.2. This is share payment. This is full market value 1.7. So the 70 is a premium, right, on the 50 million equity shares at their full value. Okay. So 100, 150 becomes 185,000. So it's left with 11,500. Meaning there's something existing at the beginning. Hold on, I'm missing something. Oh, 6 minutes to time. We've done well. 6 minutes to time. Okay. And we're done. All right. So what is left is for us to prepare the statement of financial position. I don't know how fast I can do that one. So I've been prompted the class starts at, is it 12 or 1? I've been prompted you guys have a next class. So
Around 1.
1, okay. But you guys still need to take a break. Let's finish it up with the non-current assets. So we have PPE. I might ignore the workings, but you guys can really fix it. So PPE schedule 221,500. We have that is 16. My 16,000. We have financial asset equity investments. It was fair valued upwards to what is it? 48, 44 to 48. Okay. And for current assets, what exists here? We have trade receivables, we have bank and cash, we have inventory. So inventory, we had inventory of, what do you call it? 388,625. We have trade receivables. See how exhaustive single entity is. So imagine trying yourself, tempting yourself, allowing yourself to be tempted. This is not tempted, it's allowing yourself to be tempted to get answer single entity. That's why I actually opted to clear it today. So that tomorrow would be the easy ones, console and ratios, and we do the other individual standards. 240,000. Put every day buy some 240,000. Okay. I leave the rest to you to balance it. Let me do the equity. Because I notice you are all exhausted, so no one is even talking. Please.
Hello, Isha. Are you done?
I don't know. I'm writing it and then I'll leave the rest to them. I'm actually,
Okay.
I've noticed everyone is exhausted, so I'm not engaging them because I understand how it feels. So yeah.
Please, do you have anyone that actively participated in class today?
Oh yes, me.
Oh,
Yeah, me.
I need,
As if it's
I
if
need
it is
about
money,
five.
it is me. Pardon?
I need about 5 students to give them discount for July.
Oh, okay. Need 5
If they
students
are
to
more
give
than 5, so I don't
discounts.
have a problem. But I need about 5 students to give them discount for July, like for actively participating in class.
At this rate, how will I even notice? I remember Eric's voice. I'm sure I know of Eric's voice because it was in my ears. I know Lady Tina was somewhere. Faustina was yesterday's class, so it's clearly not this one. And Eric will pass this city, so is it Faustina? Um the guys, some of them have left, so unless I do wish. I wish.
Okay, so
Let me
let's preserve it.
finish my question.
Let's
I'm trying
preserve
to
it for
end it.
the next class. But Mr. Eric, Lady Tina, and Madam Faustina, please can you message me on WhatsApp?
Eric is already our student. He should message you and do what again. I give him
Yes, yes,
discounts for next
yes.
time.
I'll give you
It's
discount for that.
level 3. Okay,
Yes,
I've
I'll give
heard
you
you.
discount for that.
I've heard
So
you.
please, Lady Tina, Mr. Eric, and Madam Faustina, please send me a message, okay?
There's some gifty Daku today.
Christiana Darwin.
Gifty
Okay, give
somewhat Daku. I remember that face.
Madam
Even if
Gifty,
she didn't
please message me.
participate, but her picture was doing my eyes. She and Ofosua. Their pictures, this were doing my eyes changing. Check premium.
So please message me. I'm offered you 20% discount for July 2026. Please message me.
If you are interested, information so forth.
So you can end the call and balance it and send the wrecking ball to them. We are going to meet tomorrow 6 o'clock p.m. to 10 p.m. And then our last session will be Thursday dawn, which is 26. That one's not going to be an active session. Your facilitator will just do some small touches and then you will end the class. So please let's take note of that.
Hey, who is asking why do we treat depreciation under cost of sales? Jetman, were you doing self learning? Oh, it's an old message and I'm now seeing it. Hey, okay, old messages. Guys, your messages don't come on time. All right, please let me end the session. You can all go and sleep, okay? Those that don't have another class, please kindly go and sleep or learn. But sleep is good. Kindly